Hi, everybody. Who says that nations don't need central banks as the Russian ruble turns into Rubble? And I don't want your accounts to turn into Rubble either. So, something for you to think about. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. We're live. Okay, so use less leverage, right? In this environment. I left you last Monday saying that the trade was to wait for the initiation of conflicts, of hostilities, and then you could fade the market. So no matter whatever your poison was, you could have bought the euro on this spike down here. So I've been talking 110.50 for weeks, months, going back to last year, and we got down to 11.05. For a position trade, that's close enough for government work. We could get a decent little rally, get a little ABC here. I still think that the euro has another low left in it, but we could rally first. So far turned back by this descending triangle. So going into the invasion, I showed this, and that if we took out 112.80 and measured 110.50. So this was a good trade. When I was on with you Wednesday, I was shorting the pound up here at 35.80, covered it on the waterfall event after the invasion. I had no idea where gold would go to on the invasion, and sky was the limit. But when you look at it, that was a fade. I had no idea where silver was going to go. That was a nice fade. I did give you guys a number on the S&P for a fade, and it was 41.20. Talked about that all last week. The low of the move was 41.06 on my platform, 41.07. And we have a 2 drive here. So another successful call. I will admit that I did some scalping in between where it was kind of a push. I made money shorting gold, and then I lost a little money being short gold, but got out before the invasion. Only thing I really took home into the invasion was the short cable trade and some SCO, which, gapped lower and came all the way back. Probably see it better on a shorter term chart. Here's the 2 hours. So this was the invasion here. So, and this is when crude was 100 and came off. Pretty good reversal. I still think that there's a pretty good chance that we're peaking here. This bothers me a little bit, this confirmed high that we have here in crude. But I was thinking about this, that this war, unfortunately, is really being fought on a battlefield where there are casualties, where people are losing their lives due to this conflict. But this war is also being fought out in the markets, and that's why you had the sanctions of sanctioning the central bank of a country, where you can't come in, and even though intervention usually isn't a successful strategy for defending the currency in free fall, at least you have that backstop, which Russia doesn't have right now, and that's why the ruble has done what it did. I mean, an amazing move. This is just today. Look how it dwarfs all the action. Here's a weekly. Look at that range. So the interesting part of it is the crash in the ruble is also affecting euro, and to a lesser extent cable, right? So, I still think that we're going to, cable has unfinished business to take out this low, which the euro already has taken out this low. It looks like a 3 drive here. So what you do here is you put on a piece and use less leverage. when you trade the markets, and wider stops so you don't get picked off. That's the point of the lousy song, okay? So, I mean, we could still trade down here. What's interesting is with this happening in the Ukraine and all the NATO countries getting very worried about perhaps this is an analog to World War II when Adolf Hitler said all he wanted was a Sudetenland for, because, you know, the people needed more room. It was a small geographic area with a large population in Germany. He also used the argument that it really wasn't a state or a nation anyway and belonged to Germany. Does that sound familiar? Anyway, that's what Putin's doing. But I'm talking about, you know, if we keep, the ruble keeps crashing and the fear keeps coming into the market, that I think we're in a major bottoming process. Isn't it ironic that it's not going to be because of rates or what the ECB does or what the Fed does, that what's happening here on a geo level could be setting the stage for a major dollar peak. My followers know and listeners know that for the last several weeks, I've been saying that I didn't think that the dollar had peaked, that there'd be another high. And that was not an easy call down here. You had everyone down here claiming the death of the dollar and then here claiming the death of the dollar. I'm sure they're doing it here. I think they have a better chance of being correct here, but what tells me that there could be another move, one more move up towards 98-ish, 98.50 is the 4-hour chart where you have a confirmed high, which is something I teach with RSI. So what is the implication of a confirmed high? Normally it is a high, but not the high. So even if the Dixie pulled back to say 96.40, 96.20, as long as we're not taking out these lows of 520, there's still a chance for one more rally. The euro isn't going to be my preferred short. I think there's more business to be had on the downside in cable. Should the dollar continue to weaken and we get a rally back to 35, that's a zone of interest for me to be selling cable. The yen is down a bit and rates, yields may have peaked. You know, we're down quite a bit on the yield chart, left a gap of about to gap down. So, you know, this is interesting. Normally, you're going to have a peak with yen. So I can't get aggressive about being long US dollar yen, although I can't get short yet. I still think there's a chance of a 117 print. Maybe I'll attempt some type of loss, but here's my trade to be short is up here. I don't know where I would get long. My bias is to short this because my bias has shifted. I think yields have peaked. And why can't we at least pull back towards the 1.5 level on the 10-year? You know, I know that Paul's going to be speaking, but the 1.5 is, you know, would just be a normal correction after this kind of run that we had in rates. So we'll see if that could happen. First support is going to be about 175, but I actually know of some people looking for even deeper than 1.5, possibly towards 1 or a little under 1, which is probably the biggest contrarian call on the board right now would be to look for yields peaking and for them to begin to fall when the Fed hasn't even made their quarter point move yet. So I know one thing I'm thinking, I don't know where yields are going to be at when the Fed hikes a quarter point is more of what they're looking for now, but I'd be a seller of a buyer of bonds and a seller of yields if they pop on what the Fed does next week. And I was thinking about the oil market and how many different problems it would solve for many people, like for Jay Powell, if crude peaked and started to come down. How about for Joe Biden with midterms and the Democrats, if we had a big break in the crude oil market? So that would help with rates coming down, maybe gas prices by the fall are coming down. And here's my technical case in the crude I'm going to lay out now. I don't think that Putin is going to stop selling oil. As you notice, what we did on SWIFT, he still has the capacity to sell oil. If he does that, yeah, then you're talking 120. But where's the cash, man? Where's the money if he stops selling oil? Especially now that he doesn't have a central bank to work with. And I even read reports over the weekend that the Chinese banks were not cooperating with Russia on doing FX transactions. So this is what I think could happen here, is that this is a failing rally in the crude that we had today. And I think that we're going to, get a pretty quick break towards the 80 level. I know people are going to call this a buying opportunity. It probably is for at least a trade. But I'm looking at this 80 level as being pretty significant. It was a breakout here. It was tested here. The uptrend comes in here, plus a few moving averages on either side of it, but 82 is a prior high up here. So I'm thinking we'll get a quick break to 80 and then a bounce. But if we take $80 out, traders, there's a pretty good chance we could fall back and test these lows out again, maybe even take them out. And that would solve problems politically for Biden, financially, would give Powell the option to go slowly and, take his time if he wants to continue to taper. I don't know what the market's going to do in this type of formation. So, these are my conviction trades that we're about to put in a major peak in the dollar. I think there's one more charge up to above 98, and lows in euro. Aussie's been the strongest. I don't know, my scenario for a move under 70, I think that's going to take some type of crash in copper or something else, and probably a lower market. And the S&Ps, you have what technicians would call a falling wedge. They're better when they happen at lows in the market, but here's the second hit. To me, it looks like it's not doesn't turn good, and it's going to find a lot of resistance up here around the 4470, 45, 4550. But if we start breaking out over 45 and closing above this wedge line, this downtrend, if you believe the technical theories of rising and falling wedges, they retrace 100% of the move. So if we have a breakout on this wedge, it implies new highs. So we'll see. We could also go up here and then make another trip down to have a 3 drive formation. Right now it's just 2. But if it comes back after failing up here and we sell off one more time, I think there'll be another divergence, and that's going to come in right around the 4,000 level towards the end of the month. My next major turning point period is it's a GAN thing, is going to be the spring equinox. I think it's the 23rd. So I'm looking for some important reversals between then and early April. So the big theme is I'm not going to be shorting euro anymore. I have some on. If this is the bottom, that's fine. I hope I'm early, and I'm right about the Dixie trading up 140 pips from here, and that would take the euro to new lows. I'm not going to really be interested in the pound, but I still think it's going to take out 130. This week, I'm looking for a sell up here, 35, wrong over 6.5. And euro pound, something interesting did happen. So the euro made that third drive to a bottom, right? Okay, took out the prior low. See this? And then this. So it did make a new low. You know what didn't make a new low? It's going to take more than one attempt to convince me of the turn, but the euro pound did not take out the spike low from a week ago. So actually the euro held up better than cable because the EG did not make a new low. If euro ends up going to 110.50, 110.60, and it's not taking out this low right here, that's an if. That's going to be a very serious market tell for that the euro bottom is in, because that means it's appreciating against cable, and cable's been appreciating against the dollar. So I don't know what to do with the metals. I may attempt a short here. I think it's going to be pretty hard to overcome this peak, even though it was confirmed here. But everyone's looking at 1880. A short may be up here around 1940. I think could be warranted. But you know what? Silver today is acting weaker, and my my dream scenario is that we get one more rally in the gold and silver ratio to over the recent highs, maybe up to the moving average again, 83-ish. And that's going to be help me time my long entries into the silver market, hoping that gold outperforms silver for a few weeks and we get up towards 84 is really what I'm looking for, 84. Let's look at the monthly real quick. I want to invite everyone to come in here and collaborate with us in TradeGATEHub and post your charts. It is a free platform, and we're not offering it free so we could sell you a newsletter. We're just doing this so that iron sharpens iron, and we could bring some good traders in here to help make me a better trader. So come here and make me and Mike better traders, and if you're new to it, come here and I promise we'll be patient with you, which isn't so easy for me. I think Mike's more patient than me. So Mike will be on in an hour and 14 minutes. I'm looking forward to seeing what Mike thinks with this lower opening and recovery that we've had so far. S&Ps came in 100 lower. They're only down 44. Isn't that interesting? That the commentary now is the S&Ps are doing well because they're only down 44. See how that has shifted? Okay. So remember, don't just count your pips, count your blessings. I have a great guest. He's a mystery guest. You're going to have to come here or wait until we make the announcement. He rarely grants interviews. I'm telling you, you're going to love this guy. So I'll see you on Thursday for the interview. Tomorrow, Mike and I are going to bat the ball around. Adios, everyone. Good hunting. Remember, use less leverage and use wider stops. And we'll be talking to you tomorrow. Adios.